required minimum distributions. So at age 70, the IRS, for pre-tax money, makes you take it back out, right? And a lot of times folks may not need those dollars, or it's more than they need, whatever the case might be.
Yeah. Yeah, and it's always a big surprise when they have to sort of take out all this money, and especially a lot of times if these people are still working, okay, so they have a steady and solid income here, which is subject to tax, and then these RMDs are subject to tax too. A lot of times what I'll recommend there is people can have, they can make a what's called a qualified charitable distribution directly from their RMD and give money to a charity of their choice. And then that is, we are able to exclude the amount given, exclude it from taxable income.
Right.
And so basically, for people who find themselves, trying to stay in a lower bracket, or if they don't need that extra money or whatever, they'll use these QCDs and basically donate the money to a charity that way.
Which totally offsets the income, right?
Totally offsets the income, correct. Yeah, and it's better, keep in mind as well, because I've had this question a bunch. People say, oh, well, why don't I just take the RMD, we pick it up as taxable income, and then I just again give the cash away.
Right.
And you don't want to do that because, keep in mind, sometimes people are subject to certain thresholds with what they can deduct and they can't deduct. It's better to just not touch the cash and just donate it directly from the retirement plan to a qualified charity.
That makes sense. How about those folks that may be a couple of years from that age 70 and now? Is there anything you can think of they can do to maybe minimize that impact?
That's a good question. Not really. Basically, what I always tell people is at 70 and a half, this money is going to start coming out. Basically, you got a deduction for it in the years past, and now the government, they want you to take the money, they want you to pick it up as income, and they want you to pay the tax on it. What I'll tell people is just sort of be aware of this. We can start talking about strategies, about like gifting strategies earlier, and then the other thing I always say is, in order to minimize taxes, you need to minimize income. So maybe if people cut down on their other income or other wages, then the impact of the RMD won't be as great.
Right. Okay.
But the one thing I can absolutely tell you is I always recommend, and I'm sure you do as well, for people never to take, and I've seen this before, people who don't talk to anybody, they'll take out the RMD plus some and more, and they'll take out amounts that'll push them up in the income brackets, and they'll pay tax unnecessarily.
Yeah, absolutely.
So we want to steer clear of that.
Yeah, sure. Which also affects your Medicare premiums.
Exactly. Affects Medicare premiums. They recalculate all that stuff, and it's just kind of, it snowballs.
Yeah.
Yeah, and it's not good. Why pay tax unnecessarily if you don't have to?
Exactly. Yeah. So as we kind of wrap up here, you mentioned earlier that the new tax law sunsets. 2026 is when it's done, right?
That's when it's finished. Okay. Yeah, correct.
So in this kind of period, you've mentioned a couple things already. Is there anything else you can think of that folks can really take action on now to try and take advantage of this window?
It would just be going back to, like I was saying, this qualified business income. That's the biggest thing, and then also making sure a lot of things change as well. For example, the concept of a personal exemption or a dependent doesn't exist anymore under the new tax law. However, so if people were used to get a deduction for having a dependent, a child, and since that doesn't exist anymore, there are those special credits like child credits that people can claim. I would just really urge people to make sure that they make sure that they're using all of those credits and utilizing them. And basically, if you have a situation where you have more than just a W-2, probably is best to get some sort of professional help, just to make sure that you know that your return is prepared correctly, and a person can give advice on all this stuff.
Okay, perfect. Well, I think maybe that's a good place to wrap up. Appreciate your time today.
Sure.
Yeah. So if anybody wants to get a hold of you, needs some help with this stuff, is there a good way to get in touch?
Yeah. Basically, I have a website, and on there is my email and my phone and all my contact information, and it's www.stevendjcpa.com.
All right. Perfect.
And I'm sure that'll be posted somewhere, like probably on the
Sure.
blog. So
great. Well, I appreciate your time. Thanks again for
perfect.
joining us.
Thanks so much.
Yeah.
I enjoyed it.
Thank you for joining us again for the Mainsail Financial Group broadcast series. Again, our goal is to really help give some insights and expertise in areas that we don't focus on day to day. So I hope this is helpful. If you do have any questions for Steven, feel free to reach out, And if we can help, or you have some suggestions on areas we can cover, please email us at info@mainsailfg.com.